With us, CEO, Chief Investment Advisor, EGSI Financial. Good to see you, Ed. Your thoughts on this market? I mean, the Moody's downgrade, truthfully, I think a lot of people had some concerns. They did see maybe there would be some more consolidation or mergers, particularly for the smaller names. What does it mean, and why do you think it's weighing so much on the market today?
Yeah, absolutely. Well, first of all, thanks for having me back. And, we talked about this in the beginning of the year. I don't think we're going to see more consolidations and mergers until we really start seeing, the commercial loans starting to come due. I think it's close to over $3 trillion that are going to be coming due over the next year or two. And that's when we're really going to start seeing the consolidations. And I think Moody's, the downgrade, they're looking at the amount of assets being overvalued that are on the books. And as these loans start coming due, that's going to create more downward pressure on all banks of all sizes, but especially the larger regional and the smaller banks, because right now the commercial loans, they're having to pay rates of 2, 3, 4%, and now all of a sudden they're going to be paying 7, 8, 9%. They're going to have to personally guarantee those loans, and they're going to have to put up more collateral. And that's going to create the downward pressure. And so I think right now in the short term, I think the market is going to continue to rally. We're going to see some ups and downs, but I don't think we've seen the worst of it yet.
I see. So, and are you concerned about CPI and PPI this week at all? Or those are going in the right direction?
I think they're going to be higher than what people expected. We've been anticipating that the Feds are going to raise another 25 basis points this coming September. I'm not sure if the market's really priced that in yet. But the big thing is, when we're looking at this, we really have the retail investors that have really been driving the rally. And I think we're going to continue to see that, because it really seems like they're not paying attention to the fundamentals. And that's why I'm saying in the near term, the market's going to continue to rally probably through the end of the year.
I see. So if the market is going to rally or move higher, what strategies do you recommend when economic news can sometimes pull us back and forth?
Yeah, that's a great question. For us, it's really about hedging everything. I still like treasuries, the risk-free type investments, hypothetically, right? Because you have inflation. You have to participate in the market, but you want to make sure that the things that people need, energy, utilities, healthcare, even though everything is down a little bit more right now, I think that those are the sectors that are really going to continue to move forward and go up. The financials we stayed away from, even though they really rallied in the middle of the summer. I still think that that's kind of buyer beware for us.
I see. And, with the VIX jumping, I mean, today it hit a recent highs that we haven't seen since May. Yields are coming down, and sometimes we see that inverse relationship where when yields are coming down, markets start to rally a little bit, but we're not necessarily seeing that today. The pressure is just on, and the fear is there with the VIX.
That's right. So you're going to have that consumer fear, investor fear right now. We're going to see a big change at the end of the week, when the GDP numbers come out. But again, I think for between now and the end of the year, the market is going to stay positive. It's just going into next year. That's where we're going to see the real change. Again, I don't think we're going to have a deep recession, but I think we're going to have one. I mean, we've had an inverted yield curve for, a year and a half, 18 months. And that's kind of a telltale sign, and everyone's been ignoring it. But, again, these are just signs of things to come.
All right. Thank you, Ed Siddell, EGSI Financial.